Hi, I'm Kevin Flanagan, Head of Fixed Income Strategy at Wisdom Tree.
And I'm Jeff Weniger, Head of Equity Strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Hello, everybody. Welcome. Here we are again. AI, is it ever going to be out of the news, Jeff? Are we going to have to talk about AI forever? Let's ask AI the question, right? So
really.
That's what we're going to talk about today. Is it all roses? Are there any kind of hiccups or any kind of chinks in the armor? Being from the bond side of the equation, there's actually been quite a few bond issuance occurring that weren't that well received, actually, that there were some minor hiccups in terms of the interest rates that needed to be paid. But what we wanted to do here, and we want everybody to spread the wealth and share with everybody here the minds on the markets, is that we're going to talk about what's going on with AI, the Mag 7. Is it all roses, or are there issues? What about capital expenditures, Jeff?
Yeah, look, I mean, you want to separate yourself from the excitement of the tech, and sometimes you just need to bury your head in some 10Ks and try to figure out if it's going to be a profitable venture. And it's hard to tell who the winners and losers are going to be. And you're talking about, okay, Kevin, you're talking about people coming to market with new paper on the fixed income side. There was just a few years ago, we were talking about how much cash is on some of these Mag 7 balance sheets. In context of the Federal Reserve cutting rates and hiking rates and so on and so forth. And now you have a situation where suddenly cash is becoming a little bit more of an issue. The Mag 7 as a collective, they had operating cash flows. We calculated it was plus 21 or plus 22% year over year. Well, that's pretty good, right? I mean, operating cash flows for the Mag 7 up, call it 21. Bingo, great. The business models are in rude health. Everything's fine. Except when you take a look at CapEx jumped 61% for the Mag 7 as a group in the 4 quarters through the earnings season that just completed a few weeks ago. So now you have a little bit of a situation where there's, and I don't want to say crunch. I don't even think that should be the word. But remember, a stock's value is the present value of all future free cash flows, Kevin. And we're told that the Mag 7 are the healthiest companies on planet Earth. And they're doing great. They're doing fine. But their collective free cash flow was down year over year because it's all this data center build out. It better materialize in free cash flows come 2029, 2030, or there's going to be a force to be reckoned with here.
So, I cut my teeth on the bond trading floor. And we used to always talk about the other side of the trade. Is this what you're talking about? Is this the other side of the Mag 7 of the AI trade?
Yeah, and this is basically the argument that has only been really, people have been making the argument for a few years, but now the market is just now starting to take notice, which is, nobody knows how many trillions of dollars need to be plunked into the technology and then how much you'll be able to reap in cash flow. So for example, we're looking at Amazon, and I mean, what is Amazon anymore? The business model of years ago is fundamentally different. It used to be primarily a retailer. Then we saw the advent of Amazon Web Services. And now it's this AI concept where I guess we're going to have to get into nuclear power over at Amazon. But when you tally up all of its free cash flow over the last 10 years, all of it, not average per year, all of it, it's 114 billion combined. So third quarter of 15 to third quarter of 25, 114 billion. The company's 2.36 trillion. And then what will free cash flow be in the next 10 years? I haven't the foggiest idea. But you start discounting all these future free cash flows to the present value. You start saying, well, Amazon, when is it going to manifest? Because in the last year, they only had 10, $11 billion in free cash flow, and it's down from 43 billion in the prior year. So there's some question marks here, Kevin.
So quick, 30 seconds here, right?
Yeah.
We like to keep this nice and tight. 30 seconds. You ready? Pressure's on.
Okay.
Is the market looking at this, or do you think this is something that could be making headlines weeks, months ahead?
It's looking at it now. is looking at it in the November action, and it's really the first time the market started to really ask some serious questions about the S&P 7 against the S&P 493. We'd be taking a closer look at the S&P 493 for investments going forward. There's just a lot of rich valuations in here. We're pulling a lot of stuff at 50 times trailing earnings or above. The NVIDIAs of the world are in that list. So look for some value screens. Look for some dividend screens, buyback screens, and what have you, because we're in a top-heavy market, Kevin.
That was 30 seconds. Nailed it, Jeff. Nailed it.
We're veterans, man.
So everybody out there, this is Minds on the Markets. As I said before, please tell people if you like what we're talking about here, and we're on every other week.
Yep.
Take care.